Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Time for more value stocks now with Tracy Reineck, who's our value stock analyst at Zacks.com. I can't wait to talk about these two because they come from diverse industries. One, Skilled Healthcare Group, SKH, the ticker symbol. Obviously, in the skilled healthcare arena.
Yes. They are in kind of the hot area right now. They run assisted living and nursing home facilities. They also do have a smaller side business in rehabilitation and also hospice care, but it's their assisted living and nursing homes that are really driving their growth right now.
I find it interesting that more and more of these companies are getting into side businesses. Is this just as the market has turned on everybody?
A little bit, but I think it's also kind of the nature of that business because once you're in assisted living and nursing homes, you see kind of where the demand is for other services there, and there is a demand for in-house rehabilitation services within these facilities, which is partially what one of their side businesses. Okay. And then they also see the hospice angle of it too, just given what's going on in assisted living facilities. So I think they see that there's a need there for these other services on top of their main business, which is the actual running the facilities.
Right. Okay. Makes
so, sense. But like I said, the assisted living is still their big area, and they, they've been expanding that. They just added a few more facilities in Kansas, and it's just that's the growth area. They're growing in like the urban areas mainly, which is where you're seeing a lot of these facilities being built right now. Mm-hmm. So, the stock is trading pretty cheaply right now. It's about 7 times forward earnings, and they saw revenues grow in the third quarter. They're scheduled to report fourth quarter earnings next week, so we'll kind of see what's happening then. They're Zacks #1 ranked buy, and they're also a Zacks buy recommendation, so both of those things are very positive right now. Mm-hmm. And they also have decent earnings, given everything else that we're seeing out there right now. They did reaffirm in the third quarter, but that was about 2 months ago. It was a little over 2 months ago when they reaffirmed. Oh, I guess it would be 3 now, about 3 months ago. Mm-hmm. But they saw 98 cents to $1.03, and the analysts are at about 99 right now on the lower end of their guidance range. So we'll find out next week kind of, how they're doing. But that area is pretty stable right now.
Well, it's going to be interesting to see that as a result of this negative economy that we're in, when this picture may turn around and for which one of them, as more and more families can't afford this type of care anymore.
Well, you have that aspect, but you also have a lot of states now that, and we don't know how this is going to play out either, but the states have been sponsoring through their Medicaid programs a lot of these facilities.
True.
And so a lot of the growth has come from that because the Medicaid is paying for it. But given the budget problems that a lot of states are having now, we may see some cutbacks in that area too. So yes, they could, going forward, have some issues, with growth and the bottom line, but we'll see. We'll know in maybe a week.
You just never know.
No.
That's the wild card. What's the picture look like on them? On the stock price?
It's not bad. It's fallen, off the highs, just like everything else. And that it's like I said, it's trading around 7 times, so that's not a bad place to be right now.
Okay.
Yeah.
And then we have RALCorp Holdings, RAH, the ticker symbol. Now, this company's in the food business.
Right.
And any exposure here to this peanut situation?
Well, they do have some because they actually just bought out Post Cereals from Kraft in 2008. So that was their big acquisition. But they're also a huge maker of private label brands for like supermarket chains and club stores and things like that, bakeries. So and one of their big areas is crackers and cookies. They're the biggest private label brand maker of those items. Mm-hmm. And so they have had recalls on some of their products that have had peanut butter in them, which they have on their website. So
far, though, has not impacted their bottom line.
Well, again, we don't know. And some of it, they've just withdrawing it out of caution. It seems anything with like the peanut butter stuff in it is being withdrawn. But they're set to report this week on earnings, so we're going to know a little bit. But how much will it affect this last quarter? I don't know because it was mainly in the month of January. Right. So it probably won't be that bad.
And they're reporting for 4Q, correct?
Their first quarter 2009 is what they're reporting.
Okay.
Yeah. So, the company otherwise, they just had this big post-acquisition, like I said, and that is really impacting their bottom line for good and bad. I mean, they saw a huge uptick in sales in the last quarter because of that acquisition, but they also have had a lot of costs associated with it, like assimilation costs, which they did say in the last quarter is going to head into 2009. But, how badly that'll impact, we don't know, because they are seeing these other good synergies out of that acquisition. Right. But otherwise, a lot of their brands, like the bakery goods and the crackers and things are all doing well. They had some pricing power in the last year and were able to raise prices, and they saw some volume increase on some of their product lines, everything except nuts for some reason. Well, that was flat in the last quarter, but everything else saw a little bit of uptick in volume, which is what you want to see from a food company, and then they were able to raise the prices, so that helped with their sales as well for that quarter. They're also a Zacks #1 ranked buy and also a buy recommendation. And right now the food companies are kind of a good place to hide out. I mean, they're a little different than some of the others that have the big brands that we all recognize. But, their products are in like a ton of restaurants and these supermarket chains all over the country. And then they're going to have Post, too, which everyone does recognize for that brand. Right. So, their fundamentals are pretty good. They have, they're trading about 13 times forward earnings. And so, they're not super cheap, but they're not real expensive either. So it's not a bad place to be right now. Their earnings picture is a little more dicey. They didn't give actual earnings guidance in the last quarter. They just talked about how the Post brand was going to possibly affect 2009. And so their earnings are a little bit all over the place. They're trending down 3 cents for this coming quarter, which we'll find out this week. And then they're up a few cents over the last 60 days for the full year. And then 2010, for some reason, the analysts are a little more bullish, and the estimates are up about 10% year over year for 2010. But that could also be because they feel like the Post cereal acquisition will be fully integrated by then. So,
do you own either of these two stocks?
I do not.
All right. Well, one thing that is in one central location on Zacks.com's homepage are the Zacks Rank Buy stocks. They're in the upper right-hand corner of the Zacks.com homepage. And if you want to see more of the value stocks that Tracy has written about in the recent past, go to that location. Click on the latest headline next to the value listing. It will take you to her most current story and a little bit of an archive of about 4 that she's written about over the past week or so. With Tracy Reineck, I'm Terry Ruffalo.